Meantime, the growth trade broadly outperforming value this year, but one of our traders is pointing out a divergence in how small and large cap growth stocks have fared. Let's go off the charts with Chris. What are you looking at?
Well, I think this is really interesting because it's the exact opposite of what was playing out a year ago. So 1 year ago, if you go back to last fall, early last winter, you had growth versus value actually making new lows. And it was making new lows among the large caps, but it wasn't making new lows among the small caps. The growth names in the small cap world began to turn up about a year ago. Fast forward to right now, it's the exact opposite. You have the large cap growth, as we know, as dominant as it's been over the last number of months. Curiously, small cap growth really hasn't worked here. Small cap value has been pretty dominant over small cap growth the last 3 or 4 months. So I wonder kind of what that message is. Is it the market hinting at us that maybe we should dig into these value stocks and try to find some areas that in any broadening of the market where we want to play? So I think there's a couple names here probably worth talking about. Industrials have been a favorite of ours. Parker Hannifin, I think, is a great example of something in the value index that has just been neglected all year. This is a stock at new absolute highs and new relative highs. Very much a standout within industrials. PACCAR, PCAR, another example of that. And what we like about this one is the sell side hates it. There's like about 20 analysts who cover it. There's only 5 buys on the name. Another stock that all year, despite the emphasis on growth, has exhibited leadership. And then lastly, if you want to stay with tech, look at IBM. I mean, this thing is finally coming.
Really? Is that what we got to do on a day like today? I got to go to IBM. I thought those were the down days where my glass was half empty.
I mean, this is coming out of a 10-year range. Yeah. It reminds me of Microsoft, say, 10, 12 years ago, when no one would even consider Microsoft on the long side. Another name the analysts hate. 23 analysts covered, I think 4 or 5 buys. So look elsewhere if this thing is broadening out.
Julie, you like any of these names?
Yeah, I like most of them, especially IBM. I think companies like IBM are the type that are actually going to benefit from AI in that they are a trusted resource in terms of guiding enterprise companies into how to do this, right? And if you already have your exposure to Google for your AI, I think this is also an interesting one. And I love that it's like when it's so hated, you know, typically there's just no more sellers left, right? And those are the ones that can be a really nice opportunity.
Karen, do you like either of these industrials, PACCAR or Parker Hannifin?
I don't know them so well, to be honest. I mean, my industrial heart is with URI, and that's been a decent place to be. I do have a question, though, for either Julie or Chris. When you say small caps, in your view, what is that, 10 billion? What is it?
You know, it's funny. You'd answer that question very differently a handful of years ago. The small cap index has been brought up so much. I think you're dealing with somewhere in the 5 to 15 neighborhood, which sounds absurd relative to what we would have said 10 years ago. But I just think the reality of the indices put you kind of in that cap range.
Yeah. Same for you, Julie?
Yeah, absolutely right. It's sort of, there's a lot of dispersion where you have a lot of the micro caps. And then there's kind of this gap between, let's call it 1 and 5, and then suddenly between 5 and 15, there's a lot more populace there. So it just really depends how you want to define it. But my clients certainly like to give me a hard time about it, that's for sure.